Hey everybody, welcome, welcome, welcome. Welcome to the session today. Today is Monday, January 5th, start of the new year, and I'm excited to be here. I hope you guys are excited to be here too. What we're going to do is talk about the positions that I have right now in this account, this $5,000 account that I show everything live every time I make an adjustment or go through the account, buy something back, sell something. I'm going to do it live with you guys. So that's my commitment. And then also we're going to go through some Q&A. I know I have already some Q&A, so I'm going to address that as well. Let me take a look and see what that question is from Andrea. Would you trade a $14,000 account and you have enough experience? So I'm going to go through that as well. So thank you for the question, Andrea, and thanks for being a member. I saw your message a few minutes ago on Discord also. So let's start off. Again, like I said, welcome. It's a new year, so I know a lot of times people will kind of, New Year starts and what do you call those things that people, resolutions. What are my resolutions for this year? Yeah, I don't really believe in resolutions so much, but I do believe in really trying to look through and contemplate my last year in general, not just trading, but in life in general. Where was I last year? Where do I want to be? How do I get there? And it's a great time to really take some time and sit through those thoughts and feelings. Thank you for the hearts, by the way. Appreciate that. Let's start off with going through the account. So right here is this $5,000 account, a real live account. I want to walk through a few different things with you to help you familiarize yourself with what you're looking at, right? So if you're with Schwab, your page probably looks like this, although you can customize a lot of these columns. If you're with a different broker-dealer, it might look a little bit different, but it will generally have the same type of information. So you just have a different format of the way it looks like. I've had a few questions on my YouTube channel, can I do some videos walking through, different platforms, Robinhood or Interactive Brokers, and such. And it's hard for me to do that because I personally use Schwab. I've used other broker dealers in the past, but right now I have a few different accounts through Schwab. So it's easier for me to use that rather than let me open a new account, let me move money into it or use a paper account or something like that. I do have some older videos on my YouTube channel with Interactive Brokers. I was with them for a whole bunch of years. So I have some older videos walking through some stuff there, and you're always welcome to put some questions, and I can help where I can. But the videos that I show in this live stream are going to show the Thinkorswim platform and the Schwab platform. So here's my account here. So a couple of things that I want to walk through, and I encourage you to shoot some questions through as you have them. But if we look at the first thing is looking at the positions, right? So here's my positions page, and here's my Mara position. So here shows the ticker Mara 100 shares. My cost per share is how much did I pay for the shares. Now you guys might remember, those of you who have watched this live stream for the past few weeks, these 100 shares came from having a put assigned. So I had a couple of weeks ago a $10 put that got assigned, meaning the price of Mara closed under $10, requiring me to purchase 100 shares. I did not freak out. I just bought the shares. The reason why it doesn't show $10 as the cost basis, and this is just a reminder, so it's not meant to bore anybody, but it's important to kind of go over the fundamentals over and over again because repetition is the mother of skill. And oftentimes investing and trading and options in general is like another language. So it takes a little bit of reinforcement. So hopefully I'm not boring anybody by the repetition, but I want you guys to learn as best as possible. The last thing I want to happen is somebody, watching my videos and goes to make some trades and they don't really know what they're doing and they make mistakes and lose money. So I'm trying to prevent that, and I'm trying to help you, obviously along the way. So what I'm getting at is the cost per share shows less than $10 because when we get assigned on a short put, when I sell a put and the price goes down and then I subsequently buy those shares of that stock, initially it will show the cost basis as whatever that strike price was, right? So this was a $10 strike. So initially on Monday it showed $10 as the cost basis. And the way Schwab does it, different broker-dealers might do it slightly different. Schwab does it, they adjust the cost basis on Tuesday to reflect the premium that I got for selling that put. So I had gotten 25 bucks originally for selling the put. So $25 gets subtracted from the $10, or I should say 25 cents, because I don't want to confuse anybody. I had originally sold the put for 0.25, meaning $25 was dropped into my account as premium dollars, right? But the actual price of the contract was 0.25. So 0.25 gets subtracted from the $10 strike price, the original price that I paid for the shares, hence the $9.75 cost per share. So I want to take a minute and just kind of hone in on what that means. So what that means is this. If I, let's say, sell subsequent puts, let's say I sell another $10 put, and I take in premium and that were to get assigned, it's going to bring that down further, my cost basis on the shares. So that's what this means, this column. And then price column, this is how much is the stock trading at right now. How much is the stock trading at, as well as how much is the option contract. You'll see underneath the Mara position, you'll see the Mara January 9th, that's this Friday, $10 call. Why do I have a $10 call? Because I paid $9.75 for the shares, and I want to sell a call to cover those shares, take in additional income, and then if those shares get called away, great, I made a little bit of money on the difference. And if they don't get it called away, that's okay too, because I still keep the premium that I got, and I sell another call next week. Now, sometimes people will ask me, why don't you use $10.50 as a strike price, or why don't you use $11 as a strike price? And here's why. Now, I want to start by saying there's really no right or wrong when it comes to trading. I mean, really, the only right, you might say, is if you're making money. And by making money, I'm referring to realized income, right? So I don't really care about the paper fluctuation. You're always going to have that. But how much cash should I put in my pocket? As long as you're putting cash in your pocket from week to week, that's doing it the right way. In my view, right? So I personally don't choose, let's say, a $10.50 call or an $11 call, because I want to make the most amount of premium. I don't care so much about the price appreciation. I mean, I consider that kind of a bonus, but my intention is I want to make income, right? An income stream from week to week that supports my lifestyle. So a $10 call, I'm going to get paid more income than an $11 call because it's closer to where the stock is trading. So that's why I do that. I want to go through a couple of things with you. And this is actually a really good learning experience. And it's so good that I'm so happy I'm doing these lives, honestly, because here's why. It's all great, like teaching, like, well, here's how you sell the contract, and here's what it means, and here's what it looks like. But when you see like the value adjust, as time goes on, that's where a lot of the really clicks happen. Like, meaning that's when people really start to grasp the information and really understand, the correlation between, okay, if the price goes up, what does that do to my put price? What does that do to my call price? So the fact that we're seeing this all together live, I think is amazing, and it's so beneficial. And I want to walk through that so I help you guys learn. So I want to show you a couple things. Right now, Mara is trading at $10.60, right? You'll see the price. That's the price of Mara at the moment. Now that's good because I paid $9.75, so the price is higher than what I paid. And you'll see, I want you to ignore these for now, the day change percent and day change dollar. But look at the gain loss dollar and the gain loss percent. That's going to be like how much dollars did I make in this position since I opened it, right? So for example, if I paid $9.75 for the shares, and right now it's trading at $10.60, I'm just rounding this off, that means I'm up this amount here. I'll make this bigger here, $83, right? And then this other, I want to show you both and how they correlate with one another. Here's my call contract. So I sold this, right? So I sold a covered call, hence the -1 in the quantity section. You want to always make sure you didn't buy a contract by accident instead of selling it. So that's important. How much did I sell this contract for initially? 35 cents, meaning $35 was dropped into my account, and that was what I was paid in premium for the commitment to sell my shares if the stock closes above 10 bucks when the contract expires on January 9th, right? Now, how much is this contract trading at right now? It's trading at 0.745, meaning if I wanted to buy this contract back, how much would I pay for it? So I want to talk about this because it's important, and you have to, these are things that you have to understand in order to be successful, in order to really know what you're doing when you're trading options. So let's talk about that, and send me questions. I haven't really looked at the questions. I think I have a few, but I'm going to look at them in a moment. I just want to explain to you exactly what that means and how to evaluate that. So here's what you want to start to look at, and you want to do this every day. Listen, when you're trading, it's like, I'm not saying you have to be like tied to your screen, because you don't. That's the one of the advantages of trading options. You're not looking at screens all day. You're not day trading. But really, on a daily basis, you want to kind of look at your positions, because that's your money, right? You don't want to just like set it and forget it. And so you want to like do these steps that we're doing together right now on a regular basis when I'm not with you, or on your own. So here's how you want to look at that. Right now, I could, if I wanted to, liquidate this whole thing. And what I mean by that is this. I could buy my call, and this is important, so pay attention. I could buy my call back, my $10 call. If I did that, I'm going to lose money because I originally got paid 35 cents for it, and I would buy it back at the market, which right now is like 75 cents. I'm just rounding off. So I would lose, in dollars, I would lose 39 bucks. You see right here in the gain loss dollar section, $39.16. That number is always flipping because the price is always flipping, but that gives you an approximation. I'm going to lose 39 bucks. At the same time, I could sell my 100 shares and make $83 because I bought them for $9.75, and I can sell them for $10.58. So it's trading higher than where I originally bought them for. Now, what I want you to pay attention to is this. What's the net result? So if I wanted to get out of this trade early, I could do that. I don't have to wait until Friday. Listen, options are very flexible. Just because you sell a contract that expires Friday, January 9th, you don't have to wait until January 9th. You can buy it back now, later today, tomorrow, whenever the market's open. Options only trade during market hours, so they don't trade overnight or anything. But you have the flexibility to do that anytime up until the contract expires, which is the close, 4 o'clock Eastern time on January 9th. Now, the reason I might want to do that is because I might want to take the risk off the table. Listen, guys, it is so easy to make money, and it's harder not to lose money. So I might be thinking, okay, well, I could buy back my call and sell my shares, realize a net gain of $45, meaning I'm going to lock in that gain of 45 bucks, and the risk is like eliminated. I don't have shares of Mara, and then I could, let's say, sell a put, like a $9 put on Mara for next week, or some other ticker or whatever. So that's important. Now, I want to show you guys this also. I'm in the process of really like putting these types of spreadsheets in an application. I know that so many people I talk to and I hear from, they don't really understand spreadsheets or how to work them and how to look at them. So I'm in the process of like making these into useful applications, but this is kind of a spreadsheet that I have that I use that kind of helps me determine, okay, should I liquidate all of this right now, or should I wait until Friday? And so this kind of makes it more mathematical. I plug these numbers in. They're not linked to real-time data. I manually plug them in. So I did that before I started this session. But basically, if I wait until Friday, I would be making an additional $16.50 on this trade. So I'm going to wait. I'm not going to liquidate, but this type of thing is helpful for you to use or create. It kind of like says, okay, if I buy this call back and I lose 39 bucks, and then I sell my shares and I make $85 and I net $46, is that smart to do today, or should I wait until Friday when everything expires? And so this kind of makes it mathematical. So yeah, so I just wanted to kind of walk through that for a moment. Now let me go through some of the questions here. Let's see. Here's my questions. Just give me a moment while I read through those. And Andrea, I'm going to answer your question in a moment as well about the $14,000 account. Let's see. and for those of you, I get this kind of comment a lot. Nadine says, hello, Michelle. I love your content. My English is not that good. I come from Germany. I so appreciate the people that are on my in my community here from overseas. And don't ever worry about your English. Every time somebody says my English is not that good, your English is amazing. First of all, I think Americans in general, and I'm American, so I can talk smack about Americans. I think Americans in general are often, a one language kind of, person. I guess I'm a one language kind of person. I mean, I speak a little bit of a couple different languages, but not fluent or anything like that. And props to you for being fluent in different languages. So don't ever apologize. And your language, the language that you use is always, I promise you, better than what you think it is. So thank you for that. Let's take a look. Let's see. So somebody had said you just want to get out and drive income off your cash. So let me go back to this briefly for a moment. Yes, so the reason I may want to, let's say, liquidate this whole thing is to get out of that position. All things being equal, and this is important, I want you guys to hear this. All things being equal, it's better to drive income off of cash than driving income off of stocks that you have. And here's why. Like right now, I have these 100 shares of Mara, which is okay. I like Mara, and I'm driving income off of that. Like last week, I sold this call for $35, and that's great. But the Mara does have paper fluctuation, meaning that it has the ability to go up and down. So what would happen? Like Mara right now is up. We'll see that on the chart here. It kind of popped up a little bit today, but that's not to say that tomorrow it might gap down. And locking in a gain today, it's kind of like, okay, would you rather have, I don't know, a guaranteed $50 today, or would you prefer to wait until next week or Friday or whatever the case might be and have a possible $60, or in this case, $65, something like that? There's no right or wrong answer. So it's not necessarily right or wrong. Again, as long as you're locking in income, your preference is really what your objectives are and how you want to trade. I'm here on this channel not really to give specific advice, hey, you should do this, or hey, you should do that, but more like, here's how it works, here's how the strategies work, and there are really only two simple strategies, like I always talk about: selling puts, selling covered calls. I walk through different tickers in my YouTube videos. I walk through, this live account to show you the mechanics. But really, there's not like a right or wrong. It's up to you to determine what works good for you. So thank you for that comment. Let me go back to the questions here. But yes, it would be driving income off my cash. And good job. We are eBay that you've been paying attention. I like to see that. So Boston won. Oh my gosh, I love your comments on YouTube, and I appreciate you commenting and watching lots of my videos. And your question here, let me answer that. Would you say that if a stock had a 21 delta and the IV, implied volatility, was over 50%, that trade would end up worthless? That's a good question. So let's walk through that. So a couple pieces to that. There's delta and there's implied volatility, right? So the delta, just to review that, basically how that works. The delta is kind of like the cheat sheet way of what's the percentage likelihood that the stock is going to close in the money when it expires, right? So let's say if it has a 21 delta, if a contract that you're looking at has a 21 delta, it's got approximately 21% chance of closing under that strike if you're selling a put by the time the contract expires. Now, that's not to say that it can't close, and also delta changes, right? So as things change throughout the day, the price changes, the volatility changes, the delta changes. So if it's 21 now, it might be 25 tomorrow or 15 tomorrow, depending on what the stock's doing. The implied volatility is how much swing it has, right? So 50%, that's my sweet spot in the implied volatility. That means it's got, it's expected to move perhaps 50% up or down throughout the year. That kind of, and you can use the implied volatility as a comparison like of one ticker against another. Like, you know, I'm looking at this, you know, I don't know, Google as an example, and it's got kind of low implied volatility. Maybe it's like 25. And so the premium is not as much as, let's say, Tesla that has implied volatility of, you know, 60. So that's kind of how you look at that. Now, your specific question, would you say that if a stock had that delta, would the trade end up being worthless? I wouldn't say that because it has a 21% chance, you know, of being in the money. So I would say it has like a 80% or 79%. Oh, I don't know why my screen keeps doing that. 79% likelihood of being worthless. I would say this, and I don't think I've talked about this in a while in my videos. 5 deltas. I used to a long time ago always suggest new people to sell puts, especially when they're new, to use a 5 delta, because mathematically, if you're selling a put that has a delta of 5, there is 2% is the likelihood that you're going to have to buy that stock. So it's very, very low. You might ask, like, well, where'd you get that math? That's just what the math is. So I don't know how that math kind of works out, but mathematically, that's what that means when you look at statistics and likelihood and things like that. So, so in answer to your question, I wouldn't say it would end up being worthless. It's more likely to be worthless than not worthless. But yeah, it's not super, super low. If you used a 5 delta, then it would be like, okay, probably 98% of the time, I'm never going to have to buy the stock. So hopefully that's helpful. The problem with using 5 deltas, though, sometimes is the premium. You have to balance the premium. Like, am I going to get paid some premium for the risk or the capital that I'm putting up in that trade? That's why, again, you always have to calculate the rate of return. So many people I talk to don't do that, and it's such an easy thing to do. And it's such a, you know, for me, it's required. I never sell a put without calculating that. So that's something that you want to take a look at. Let's see. That sounds like a credit spread setup. I'm not sure which you're referring to there. I was going to do a credit spread today. Actually, I spent most of this morning. I was planning. I've traded credit spreads in the past. My honest opinion about credit spreads is they're kind of a pain in the neck because they're a lot to manage, right? So you're selling. Here's a credit spread. Let me kind of like walk through that first. A credit spread, and you could do it on the high side or the low side. You could do a call credit spread or a put credit spread or both. But basically, let's say you're doing a put credit spread. You're selling a put here, right? Let's say $100 strike price. And then you're buying, let's say, a $95 put. And your risk is limited to whatever the difference is. So if it's $5 in between the spread, your risk is limited to $500. They're a lot to manage because over time, let's say as it gets closer to expiration, the stock, in my example that I'm using here, let's say the stock is trading at, $98. Okay, the short put that you're in is in the money, but the long put that you're in is not in the money. So it's a lot more stuff to manage. A lot of people ask about credit spreads, and they are valuable, especially for people with small accounts, because it lets you, put trades in, and where otherwise you might not be able to. Also, it allows you to trade tickers that maybe you can't trade. So my intention today was to go through a Tesla. Tesla is probably like one of my favorite stocks, but it's like $400 or $500. So I obviously can't trade that in this $5,000 account, but I was going to walk through a credit spread for that. So I probably will do that Monday. I just didn't have enough time this morning to kind of walk through, hey, does that make sense, and go through all the mathematics. So stay tuned for that. So good point. Okay, so another person has said, good videos, Michelle. Consider moving your screen up to the upper left so everyone can see your P&L, etc. when you have your account screen open. I'm not sure what screen you're referring to, but it might be this screen here. So let me see on my daughter's. Everything is showing. So there's nothing that's not showing on this screen. The only thing that's not showing, there's like an account number at the top. So that's why I have sort of my I don't know what you call that, my frame, I guess, for the video. But you have everything here. So here's your net liquidity. I don't really look at a lot of this stuff though. I mean, really when I'm looking at Thinkorswim, I'm looking at the chart, which is right here, and you guys can see all of this, I think. I look at the 1 year chart. I look at the 1 day, 1 minute. Okay, where's Mara? You know, today, this black part is during market hours now, and this gray part is like when it was overnight. And for, I forget what your question was. I think it had something to do with profit and loss or something like that. For profit and loss, I don't look at that. I look at this realized gain loss. So I know that there's been a few different people commenting on my channel that look at other things, like they look at everything in Thinkorswim. I don't do that. So I look at the chart and the stock and the options chain in Thinkorswim, and in Schwab, I look at my positions right here. I look at my realized gain. Positions is what we walked through a moment ago at the beginning of the session. I look at my realized gain loss. This is always going to update on Tuesdays. So whatever expired Friday will not show in this gain loss. So I'm going to show you that in this next one. But this shows you, okay, well, what's my gain loss? So here's my Mara $10 call. I think I had a call that expired last week that I had gotten $14 for. So your realized gain loss, I look at that. And then I also look at transaction history. Okay, well, what happened, right? So here's when I sold the $10 call that I have now. That's $36. I originally sold it for $36. It shows $35 in my positions here. Let me show you right here because it's net of the transaction fee paid. So I'm not sure if that's what you're referring to. Let me know if there's something else. But yeah, that's why it's kind of moved like that. Hopefully you guys can see everything. I know a couple times people had said like my picture's in the way. That might be. I don't know how to move that. So when I'm looking at the screen, maybe that's what you're referring to, actually. I'll have to see exactly how to change that. I use OBS to kind of connect to the YouTube. So it's just kind of like a stationary thing. But I'll take if you're referring to this right here, I'll take a look and see if that's something that I can make it look a little bit different. Thank you for letting me know. Let's see. So Kevin says, I've been selling covered calls on Mara when I first bought it at $11.98, always with a $12 strike. Friday I sold calls with a $10 strike. Now that the price has gone up, should I buy it back? So here's how I look at covered calls and strike prices. Like really, ideally, you always want to sell a covered call. This is how I do it, like right over what you paid for the stock. So me, I paid, let me go back to here. I paid $9.75 for the stock. So I'm going to sell a $10 call. If you're selling $12 calls, you know, and you have a $10 basis or a $12 basis, it really depends. You shouldn't own the stock, let's say, for $12 and sell a $10 call because you want to use a strike price that's higher than what you paid for it. And the reason for that is sometimes you can be tempted, right? So it depends on what the stock does. So let's say I have Mara, for example, and I paid, $9.75 for it, but let's say the stock right now is $8. I might be tempted to sell like a $9 call, but I shouldn't do that because I own the stock for $9.75. And if my shares were called away, it would result in having a realized loss. I trade in such a way where I want to make money. And when I say make money, what I mean is I want to make realized losses as much as possible. And I want to minimize let me back up. I want to make realized gains as much as possible. And I want to minimize realized losses. So not necessarily paper. I don't really care so much about that. But I want to make realized gains and minimize realized losses. So I always use a strike price that's over what I paid for it. You could, I have done this in the past also. I have, let's say I have some stock and it's come down and I'm really not able to, let's say, sell calls against that stock. Sometimes I would sell calls for underneath my basis. You have to be super careful doing that, and it's a lot more to manage. Because you don't want your shares to get called away and then suffer a loss. So that's something to keep in mind. Let's see. And I guess your question now that the price has gone up, should I buy it back? When I evaluate whether I should buy something back, I always just look at this right here, right? So I think if my face is in the way, let me see if this is better. Can you guys all see like my positions page without my face in the way? I think you can. So I always look at kind of like, what's my net? I look at, okay, if I bought the callback right here, I would lose $47. If I sold the stock, I would make 95. So as long as I'm making a net realized gain, I think that's always is never a bad thing, right? So I'll say it like that. It's never a bad thing to make realized gain. So that's something that you'd have to evaluate. Let's see what other questions that we have. Let me go through your $14,000 question. So if I have a $14,000 account, what should I do, right? So I think the dollar value of an account really, the most important thing to be conscious of. Okay, I have a $14,000 account or a $50,000 account or a $5,000 account. Really, what that dictates is how much should the ticker be, right? So can I afford to trade, let's say, a more expensive ticker instead of this ticker? I chose Mara because it's a $5,000 account. It was like a $9 stock, $10 stock. I've traded Mara before. It's based on Bitcoin, and I'm a big believer in Bitcoin. So those are the reasons that I used. If you have a $14,000 account, you could do multiple of, let's say, Mara, or you can just choose a more expensive ticker that might resonate with you, better or more or something like that. So really, that's the only thing. Relative to number of contracts, I say just stick with one contract. So if I had a $14,000 account, and especially if you're just starting off, just use a super use Mara maybe as an example. Now I'm not saying you should do that. It's your money. You got to evaluate is that something that you're comfortable with? Does that work for you? Yeah, the only difference between my account here that I'm trading and your real $14,000 account is maybe you can use a ticker that I can't afford. Let's say IBIT, but I think IBIT is like $50 a share. Yeah, it is. IBIT is like a Bitcoin. I like IBIT. It's probably one of my favorite tickers. It's a Bitcoin proxy, and I believe in Bitcoin, right? So, but that's $50. So that might be, if you sold, let's say, a $45 put, you're committing $4,500 in capital. So that might be a little bit, on the pricey side as well. So you can just kind of, go through and see what kind of ticker resonates with you. Ticker selection is probably like one of the most important things, because you want to make sure that you're not selling a put on something that you really don't want to own long term. Because if it comes down and you have to buy those shares, you want to feel comfortable if it keeps going down that you could buy more to average your price down. So you want to, it all starts off with that's the first thing it starts off with. What ticker are you trading? So hopefully that helps answer your question. You can move the screen that shows your face. Oh, I don't know how to do that. Well, when I click on it, I can't do that. So I don't want to waste time while you guys are on here. I'll have to figure out how to move that. I don't know exactly how to do that, and I don't want to mess anything up as I'm talking to you guys. Okay, let me go through another question. And I appreciate your questions, and I'm glad that you guys are giving me questions here. Sometimes people email me, and in all honesty, I don't get to those. Sometimes I get emails like, "Hey, I have this position, I got this, and what do you think I should do?" I can't really answer that kind of stuff in email, and it wouldn't be appropriate for me to answer that stuff. But when we're walking through this live, these are good opportunities for you guys to say, "Hey, I got this," or "I got that." Can not what do you think I should do? Because I'm never going to tell you what you should do. Hey, it's your money. You got to do what you feel is best. But what my role is to kind of walk you through sort of, here's how you look at it, and here's what you're evaluating. And help you come to your own decision. Okay, William says, I was assigned 1,000 shares of HIMS. Oh, HIMS is a popular one. I'm happy to walk through that. William says, I was assigned 1,000 shares of HIMS on Friday. Today, the stock moved up. I was able to sell 10 covered call contracts in the money at 1.32, so $1,320 per payday. Love Mondays. Thank you, Michelle, for your work. You're quite welcome. Let's look at him briefly. So I think you were just sharing with us your success. So bravo to you. I'm always excited to see other people like successful and making money. I would say, I don't know how big your account is or anything. I would say selling 10 contracts. I never sell I don't know. I don't ever do stuff like that because you never know where the stock is going to go. And sometimes, we don't want to, let's say, I don't want to say get lucky because I don't want to minimize anything. But, prices can just as easily go down as they can go up. And the reason why I personally don't usually sell multiple lots together in one trade is I don't know where the price is going to go. So I might sell let's say one put Monday, and then let's say it comes down more. Maybe I'll sell another put on Tuesday to kind of spread things out, or maybe I use a different strike price or something like that. But very, very, very rarely, if ever, do I ever sell multiple, especially 10 on one, because that's a very, it's great that you made money, but that's a very easy way, perhaps, that you can blow up an account. I can't stress this enough. It is so easy to make money, and it's harder not to lose it. And oftentimes, when we're doing well, oftentimes we feel invincible. Man, I am the bomb. Oh my gosh, I'm making bank and whatever the case might be. And then depending on the risk that you're taking, it can be a very big wake-up call, when something happens. I myself had tons of MicroStrategy. And let's look at MicroStrategy briefly. And this is how I spent most of the morning, actually. When I was trying to figure out Tesla and walking through a credit spread, I was looking at MicroStrategy, and I was reading a lot of the SEC filings because I was like, man, look at this drop from $450 to $160, $150 a few days ago. That's a massive, massive drop. And I was reading through the SEC filings and looking at how dilution works. When companies issue more shares because they're trying to take in, so MicroStrategy is issuing more shares, taking in with the intention of taking in more income to buy Bitcoin with, and how that affects the movement of the stock price subsequently. I'm going to make a really good video on that soon. I guess what I was saying is, man, last year I made tons and tons of money on MicroStrategy, and this year I didn't lose more than what I made last year, but I lost a bundle in MicroStrategy. So what I mean is this: lessons can be painful. And it's very easy to make money, harder not to lose it. So you really have to keep your risk in check. And oftentimes what I see with people is people don't understand or realize the risk that they have until it hits them, and then it's too late. So just keep that in mind about the HIMs. But bravo in the meantime, but keep that in mind. Let's see. I have Robinhood, so I can't do a credit spread. It's level 3. Yeah, so with credit spreads, you need I think you need level 4 maybe. I always try to get the highest level, and I think the level is really based on experience, perhaps account size. I think it's different from one broker-dealer to the next. And you don't have to do credit spreads. I mean, I'm not, necessarily, I wanted to walk through a credit spread because this account's $5,000, and a lot of people ask about that, and I haven't done one for a while, and they are kind of a challenge to manage, so I thought it would be a very, very good learning experience to kind of walk through that. I think I'm going to do that Monday, and I'll probably go live every day next week because I want to look at that and kind of see how those positions are behaving as the stock price adjusts. Right now, by the way, just some housekeeping, I guess you'd say. These live streams are every Monday at 3 o'clock. But I think I am going to, when I go live, I think I went live Friday, and I notified people a few minutes ahead because I just wanted to walk through making a change. So that was the reason for that. But don't worry, if you miss a live, you can always catch the recording. Yeah, so don't worry about that. Let's see. I don't know why my page keeps flickering here. I don't know if you guys see that on your end. Let me go through a couple more questions, and then we'll wrap it up for today. I bought Palantir at 174.46, 200 shares, and then sold two 172.50 calls for Friday and collected $1,010, sold in the money calls and guaranteed $600 if shares get called away. Let's take a look at that. Palantir, I like Palantir. That's a good stock. So 174.47 is where it's trading at now. Let me just read this again. I bought 200 shares at 174, and then you sold two 172.50 calls that were in the money for $1,000. I never do that. I'd have to walk through the math, and maybe that sounds great. Yeah, I never do that. I'd have to walk through the math of that. I never sell anything in the money. I don't think I've ever done that, actually, ever. Whatever I own it at, that means I'm selling a call over that. There's going to have some, well, first of all, there's going to have something to do with a wash sale. If your shares do get called away, so perhaps this could be a good deal. There's very rarely, if ever, a situation where you can do one thing and it's a guaranteed amount of money. So sometimes people talk about that also relative to dividends or something like that. Like, I bought this stock right before I paid a dividend because I'm guaranteed this amount. But typically the price is going to be adjusted because of that. I don't know if that's necessarily the case in your scenario, but I will say this. If you bought Palantir at 174 and then you sold 172.50 calls and your shares got called away, you're going to have a loss on the shares, right? Because you bought them at 174 and then you sell them at 172, which means you can't buy that again for 30 days. I try to stay away from that kind of stuff. Wash sales are a pain in the neck, and they make things very confusing. They adjust your subsequent cost basis on shares, and it just gets a little bit messy. I try to keep things super clean, so just be conscious of a wash sale if that's the case. That is Hibit, not Hibit. Yeah, I don't know what this comment is referring to. Sometimes on occasion, I have people correct me, like ibit, whatever. I don't know, fucking potato, it's whatever. Yeah, I don't know how you pronounce it, and frankly, I don't care. I like the stock because it's related to Bitcoin, but thanks for that correction. What can you say about Zeta, Z-E-T-A? I don't know, let's take a look. Let's see. I don't know what this stock is. Zeta Global Holdings. I don't know. I never heard of that before. What I would do first would be like pull up a ZETA stock, Zeta Global Holdings, and this will kind of maybe tell me maybe what it is, and maybe not. I could look that up perhaps for a next video. I'm always looking for new ideas on doing some new videos. So I'm not familiar with that stock, but I can take a look at it. APLD, I do trade APLD sometimes, not in this account that I walk through, but that's I like Applied Digital. It's not one of my favorites, but it does have really good premium. And actually right now it's up 8%, which is actually pretty cool. So yeah, the premium is always really good on Applied Digital. If we were to look at, let's say, a January 9th, right now it's trading at $30. Now, because the stock is up 8%, puts are going to be down in value, right? So when the stock goes up, calls are expensive and puts are not as expensive. So let's take a look. I mean, look at the implied volatility is 178. That's super, super, super high. I think they're declaring earnings soon, if I'm not mistaken. APLD earnings date, January 7th. So yeah, so let's talk about that briefly for a moment. So when earnings happens, you're going to see the implied volatility much, much higher. And that it could be a couple things. So first of all, if you're new, that might be something that you might want to stay away from, until you kind of get your feet wet. And then secondarily, when you've been around the block, that could give you a good opportunity to really get what I like to say, fat premium, right? So you get paid more for the risk that you're taking. So that's the reason why right now, for sure. I mean, Applied Digital, the implied volatility is usually pretty high anyway, but right now it's higher because of earnings coming up. Okay, let's go through another question and then we'll call it for today. Yes, I was talking about IBIT. Yeah, I don't know about the H part. So the stock, and moving forward, don't correct me. Yeah, I find that kind of, I mean, I guess it's okay. And I do have kind of thick skin, but man, I'm here like just helping people. So if I say something wrong, IBIT, potato, I mean, it doesn't matter. The fact is it's based on Bitcoin, and that's the important thing. And so, yeah. Let's see. So by doing that, it also gave me, so this is Joe again about the Palantir, right? By doing that, it also gave me $7 downside protection. My trade plan with Palantir is to average into it while it's down by its lower Bollinger Band. That's a good point. So, and thank you for sharing that. I'll have to look at that. Like, how does that work if I, buy shares and then sell an in-the-money call? What does that look like mathematically? Just because I haven't done it before doesn't make it, not a great strategy. There's lots of different. I always say there's, a million ways to skin a cat, and there's lots of different cool, good strategies. As long as you're making money, it's all good. Like realized gain. And minimizing realized losses. That's my motto. Bollinger Bands, how do you say that? Bollinger? I don't know. I say Bollinger Bands. Maybe I'm saying that wrong too. I don't know. But I used to use, I feel punchy today a little bit. I don't know. It's Monday. Bollinger Bands, I used to look at those a long time ago, and I haven't in a while. You can just add them. And they can be helpful. My experience is with, I used to use a lot of sometimes MACD indicators and moving averages. Oftentimes when you look at one indicator, sometimes it's a rabbit hole. And also hey, this indicator shows me that it might be bullish, or this indicator shows me that it might be bearish. So it's just a little bit more work. I just try to be simple. I just want to make money every week. But Bollinger Bands can be helpful, and they kind of help you visually see, maybe this isn't the time to trade something. I don't personally focus too much about timing things because I trade the same things over and over again. I think I've said that in lots of videos before. Regardless of the price, I'm trading, the same ticker over and over and over again. And that's worked for me in the past. But again, there's lots of different things that work for different people. But thank you for sharing that info, Joe. Let's see. So yeah, so Nick says earnings are on the 7th for Applied Digital. Let's do one more question. What's a good method to scale as I grow? That's a good question. Then we're going to wrap it up, and I want to say thank you to everybody. Scaling as you grow, I would say a lot of times people you can get very excited and carried away with trading. That's very easy to do. And oftentimes we get excited when we're making money and the market's going up or our tickers are going up. I would say it's not really that necessary to scale. And I know that's maybe not what you're looking to hear, but I would say really get some experience before thinking about scaling. I mean, here's the thing, as long as you keep money on the side, if that ticker goes down, you want to sell another put as it goes down. You only want to trade 4 or 5 tickers. I don't ever trade more than 5 tickers. Long time ago, I used to trade diversification is important. And, hey, I want to have different sectors, or I want to have some, things that are non-correlated. So if I got stuff that's not going so well, maybe this stuff can, help me along the way. The problem with that is this. It can be very overwhelming. And if you're really doing the good steps and the proper research, when is earnings? Let me look at the SEC filings. What kind of insiders are buying or selling this stock that I should be aware of if I'm making that trade? When you have a whole bunch of tickers that you're trading, it's just harder to manage. And I feel like diversification is just misunderstood and overused because oftentimes hey, I'm trading Palantir and I'm trading Mar and I'm trading like this and that. Maybe they're not even the same, sector. They're not like all, let's say, AI or tech or Bitcoin or whatever, but they're all, let's say, growth stocks. And if one is going up, the other's going up. If one is going down, the other's going down. So I think people often misunderstand correlation. I would say usually when we're thinking about scaling, it's usually premature. But a good way to scale is waiting, waiting until those drops. And having a lot of experience to kind of like really get your feet wet. It's easy to make money and not as easy not to lose it. And when, like I said, when things are going up, it's easy to get carried away. Hopefully that helps answer. Philip, I love your comments, Philip, by the way, on YouTube. Philip said the other day, I think you're getting sick of my comments. No, I'm never getting sick of your comments. I'm not getting sick of anybody's comments. I'm appreciative of all of your comments. He said you would make a great life coach. Life coaches are amazing. I have a life coach myself, and I used to work with her. She's amazing. Shout out to Amy. I don't think she's on here. But I've been working with her for I don't even know, 5, 6, 7 years, something like that. And I had been talking to her once a week. I've just been busy, so I haven't talked to her that much recently. But life coaches often get a bad rap because, people talk about them as woo-woo or something like that. It's always great to bounce your ideas or your thoughts and your, challenges with someone who's, not related, not, incentivized in any way. That would be cool to be a life coach. Thank you for that, Philip. Anyway, I'm going to wrap it up right now. It's 3:52. I want to say a couple of things. I want to say thank you for being here, all of you. Even the guy that corrected my IBIT. I appreciate you too. I appreciate all of you. I appreciate that you're here on YouTube. Help me make this channel a movement. There are so many people in the world that are not happy, not making money, doing stuff that they don't want to be doing. I think it would be great, if people understood more, how investments work, or took control of their investments and made more money for themselves, and then they're happy, and then you interact with them, and it's a more pleasurable experience all around. So be sure to my videos on YouTube. If you think that they'd be helpful for a friend, share them, like them, comment on them. I never get sick of any of that, and I'm most appreciative and most grateful. So with that said, I want to say thank you to everybody. And catch me next Monday. And if I have another one in between, I'm going to put it on this channel. And if you missed the live, no worries. You can catch the recording. Thanks again.